time by speaking directly to our support team here at A1 on our website, a1trading.com. Up next, Chris Pulver taking over the show. He'll be in just a second, right after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome back to the show. Here we go from a wild Friday to a wild Monday to things calm before the storm with April 2nd, Liberation Day. What I keep reading headline-wise is something to the effect of Trump knows what the deal is. He's not going to reveal it. It's all about Tuesday. I actually priced out something. I didn't take the trade because I think that implied volatility is a little bit higher. So buying direction is not great. It'd be like a $780 risk for like a $300 profit. So a little bit backwards. But I'm just as curious as everyone else, like what is price going to do tomorrow? Are we going to see prices come back down to revisit the lows? Are we going to see this little correction for the end of the quarter offer any type of move to the upside? Is this going to be a buy the rumor, sell the news? I really think it depends on how firm this message sounds tomorrow. We had ISM numbers today. Everything else is low impact for the remainder. Here's tomorrow. Trump is on the economic calendar. Like I said, this is the first president that's been on the economic calendar every week since pretty much she's been elected. So I'm not sure when exactly this news drops. It could be right around 12 noon Eastern time. I'm not sure, but it's certainly making the market anxious. Like, what does it mean? I mean, technically, we're at some key levels. I'll repeat this. We'll go top down, but I would say because of that gap yesterday, is this showing slight bullish divergence? And I thought, yes, on the technical side, it could be. If the bears are going to crack these lows, there is, I'd say, kind of one little step for this market to go higher from these immediate lows, and that would be a bear trap. So that would be a move to the downside and then a bear trap where price comes back up and in, and then we can kind of recalibrate back towards this 200 moving average one more time. I still think this is maybe setting up for a high to low, any type of bear flag. I don't know if the market's going to be that technically obedient about it. I think this could be just forward pricing, lots of uncertainty. My biggest concern is that the pain just gets worse and uglier. If we talk about this from like a flag stance, just measure this move here. Let me box this in. So let's go, where's my drawing tool? So if I go high to low, box that move in, and we go to symmetry. I know I got a bunch of boxes on here, but let's say this is what we did. High, low, lower, high, lower, low. If that's the destination, that puts us down to about 5,200. Okay. If we overshoot that, I know this is a lot, but this would be an overshoot. If we went from about 5,200 would be symmetry, but we could go all the way down to about 4,800 with previous resistance becoming support and higher volatility kind of scaring and what might feel like what a capitulation move might feel like, right? So it doesn't go in a straight line necessarily. I mean, we could go break here, pull back again, break again, pull back again. We could do all sorts of stuff, and it just kind of waits. But do you think the market's going to move slowly? I don't. I think this market, if we're going down, it's going to go down fast, ugly. It's going to be scary. But I think that's what everyone's so freaking worried about, that it's like this market might not go anywhere. This market might just stay right here. Bulls can't do anything. Bears can't do anything. We're not, this would be recession. Like, I don't know. So the recession talk, the stagflation talk has to come with job numbers, which is going to be Friday. So I'd say for Friday's news, it's going to be fairly important that we see a stable print out of non-farm for the U.S. Forecast for 137. It's pretty lackluster. But if it's a whiff, or if it's like I can't remember the last time I saw a negative non-farm payroll. I mean, we've had positive jobs for a long time. This would be January 2021. That was the last time we showed a negative number. From what I'm seeing, this was a November 2024. It was positive what? Positive 16,000. So way off forecast. But let's see where this goes. Let me stretch this all the way out here. All right. Anyway, non-farm on Friday. So Trump tomorrow, non-farm on Friday. A lot of speakers on Friday too. Powell speaks on Friday. Not sure what he's doing. Economic outlook. Okay. Interesting. Some more members, Fed speakers talking on Friday. Could be opposing views on who's right, who's wrong. Okay. So that's it. Top down. Let's go. Markets are red today, just by a little bit. They came back pretty firm. I'd said if you're follow the last couple of weeks, I said that big JPM whale level is 55.65. We went below it. Hedges are right there to float back up, and they did. They successfully pushed it back up above 55.65. The close yesterday was around 5,600. So close 56.11. Cleared that hurdle by about 40 points. And I was actually looking out to see, roughly speaking, where the Q2, and I'm going to see if I can spot this over the next couple weeks. But basically, I'm looking at a 20 delta put. Should be around like 51.50 or so. Yep. So this is the option chain going out to the end of the quarter. So going out to Q2, June 30th, we're looking at about a 51.45, 51.50 strike. So I would keep that number in mind for some potential bigger picture support by the end of the quarter, right? So that's what I'm saying. Like, just based on the technicals here, if the market's still going to go lower by Q2, I would imagine that we're still greater than 51.50 by Q2, right? I mean, it's a pretty common thing. It's every quarter, roughly 20 delta. From what I could extract in some of these other examples with this, it's basically a big fund inside of JP Morgan, and they just kind of pin these monster levels of calls above and puts below, and they line up pretty close to the 20 delta. Okay, so I would say by Q2, even if we're down to that low, if we shoot through it, we're probably going back above it. So to me, 5,000, 49, 48, those are big buying opportunities. If we are offered them, I will certainly be taking some bites and seeing how this potential bottom might fold or form. I don't know if this market's going to be a bear flag. I don't know if it's going to be choppy. I don't know if it's going to get worse. So I do have hedges on to August, September, have hedges out to December. This 5,500 level is very, very critical on the technical side. XSP watching this closely this week. I want to see if we get back up to 560 this week. I've got some trades running that'd be a nice line in the sand to get back above. So set a chart alarm there. SPY, open lower, flash lower. I did see some slightly. Let's go to this workspace here. Let's go SPY. Gross. These charts are looking messy. All right. Let's zoom in here on the daily chart. So daily chart, all the indexes hit oversold conditions when we had that March 13th low. Right now, our peak to trough, high to low is around 10.7 on the SPY. And I think we had like a 15.3% correction in the Nasdaq. So from high to low so far, I mean, 10+% correction in the S&P, 15+% correction in the Qs. It's not year to date because we started off the year a little bit lower. So, year to date doesn't seem like it's down as much. But from high to low, like, that's a notable correction. So what I was looking at here was potentially some hidden bullish divergence. I say potentially because I wouldn't want to be sitting here guessing like, oh, the low's going to hold. If it doesn't hold, I'm not trying to get away. That'd be defined risk if I'm trying to get that floor. So I put in a trade yesterday around the 555 zone to see if that will hold and kind of push up for the next couple of weeks. Even if we come back and revisit the 2-week pullback. So low March 13th, we peaked out on that Tuesday, the 25th. Just this is typical what happens when we have, by the way, when we have bear markets, if we have bear markets, usually a bull rally, it's about 2 weeks. So that was a 2-week rally right there. If we kind of hold the lows and we have another kind of 2-week rally here, who knows? That would be that kind of bear flag. And look, everybody's going to see it. It's almost too telegraphed. But I would say if bears see that, self-fulfilling prophecy would be bears are like, yay, we're going to take this thing much lower. And then you measure it, and then you're talking, that 5,200 SPX level. Okay. So from the daily chart, hidden bullish divergence, momentum also showing some divergence. Let's go to the Qs. Same thing here, slight divergence. Now, keep in mind that the relative strength, this is the 21 period, it's not quite oversold. If you go to a 14 period, it did get oversold. Go to a weekly chart, we're not even close, right? Like weekly chart oversold levels, not even close. If you change this to a 21 period, I'll go to the 14. Okay, not even close. So from a standard relative strength index, we're not oversold. Momentum is not disagreeing. On the daily chart, seeing a little bit, slightly, subtle, just still not oversold. So weekly chart, not oversold. One more thing, let me go back to 21 here. Okay, and let me go back to this workspace. Have a look at the weekly chart and some of these moving averages. Here's an example. Okay, the weekly time frame, just zooming out for a second. I don't think anybody be surprised if we go from this low, which is a COVID crash low, to this high. Let's call that impulsive wave 1. 2022, it's crazy to think like the entire bear market for 9 months was a wave 2 pullback. But then once we get out of there, this is wave 3. And wave 3 is completing or completed. And now if we're in wave 4, I wouldn't be terribly surprised to see wave 4 either, be a chop fest pause where this is going to be a very difficult window before we go higher, or wave 4 could be a pullback where it's high, low, lower, low until we find this level. This would be a wave 4, and then wave 5 would be once we get out of this nonsense where we can still go. So, this wave 5 might be a 2027 projection, maybe a 2028 projection. Look, wave 2 took an entire year. It was 9 months. Wave 3 was the bottom in October 2022 all the way into our current high. That is over 2 years of trading. So, from the bigger picture, we could be years away from hitting, basically 7,000 plus. But it's relatively clean technicals. It's just, are we getting a wave 4 that's more of a pause wave 4? Are we getting a wave 4 that's a pullback to retest, last resistance level becomes support. You look at all my moving averages down here, it's showing a lot of dynamic moving averages right in here. So, I could see the market having some bounces, but, as they say, the bull rally is going to be sold in a bear market until we find major support. And then I'd be looking for a bottoming pattern. Look for a bottoming pattern. It levels out, pauses, starts to make higher highs, higher lows, and then we're talking all-time highs. Okay, so that's big picture. Today, the market's relatively calm. I thought today was going to be relatively calm because we have so much news and anticipation for tomorrow and Friday that today's probably a good day for some premium selling. So I'm going to take a look here. I actually might do a bear call spread. 56.30 would be the high from yesterday. me see if I can get something pinned. So call fly high yesterday was around 56.30. See if I can take this up here like 56.50. That's not too bad. 56.40. Highest today at 28, lows today at 57. We'd have to have a 90-point rally to get up to 40. I'd like to kind of pin this thing at 45. Let me see if I can get filled here. I'm going to move this to 45. Let me see what that would be point-wise. I might do a broken wing here for like 40 or 50 cents. So 56.40. Can we make a fresh high in the day? That might be a tall order. I could see price just being like really choppy and indecisive until we have more clarity out of the market. I don't know why the market would necessarily be front running Trump's tariff talk tomorrow. So let me see if I can get filled here for, 50 cents is decent. Let me take this trade. The premium really drops off though. So that like 45 level, I'm going to wait on this one. I'm going to go 50 cents. Try to get filled here for 50 cents. So it's going to be a pending order, broken wing butterfly. I'm buying the 56.45 call with one contract, selling two at the 56.50, and then buying one more at the 56.65 for a skip strike. So the way that trade looks is like this. This is a, oops, let me change the colors here. So this working order is a +1. This working order is a -2 because I'm selling those two, and this is a +1 with a skip strike. So I'm looking to try to take in credit up front on the trade for 50 cents. So the trade looks something like this. Here's current price. There's my profit trap at the end of the day. There's my risk. So I have this. I'm trying to go after 50 cents. I would have a $5 profit trap at the end of the day. That would work out to be, this is 56.45 right here. And this is 56.55 right here. So my little profit trap is about a $10 window near the end of the day, like literally like 3:30 p.m. to 4 p.m. That's when you start to see price actually offer you some bonus credit. Deltas on that trade right now, they're low. They're a like 7 or 8 delta. So it's most likely going to finish out of the money, which is why I'd consider taking the trade in the first place. But I'm going to try to get filled at 50 cents, which means if price goes a little bit higher, then hopefully I get filled at 50 cents and I can sit on that one for the rest of the day. Probability would be I grab 50 cents by the end of the day. So we'll see. All right, so that's pending. If it fills, I'll put it in the alerts. Okay. All right, so keep an eye on that one. 56.64. Let me delete that. And I will go 56.50 would be my pin price. Yes, okay, yeah. 56.50 would be my pin price. Okay. Want to see if XSP can get back above 560 or so. SPY, we'll keep an eye on this one. Qs, slightly green on the day. Well, green candle rather, but down. Well, that was quick. I just got filled. Well, I guess I'm in. Okay, so filled for a 50-cent broken wing butterfly. All right, let's see what happens. We get this posted. SPX 4-1 expiration. Buying the 56.45 call. Selling the 56.50 call. Buying the 56.65 call. 50 cents credit. This is a broken wing call fly. Price would need to rally above yesterday's high by 22 points. Actually, by, we'll say about 30 points. $0.50 if price is less than 56.45 by end of day. $5 profit trap between 56.45 to 56.55 and a 950 max risk. If price is greater than 56.65. Okay, that's going in to the, I'll put this in index trades. This is just going to be a 0 DT, which I don't do a lot of these, but I like it. I'm getting filled. We're doing it live, so I'll put it in. So this is 0 DTE. I'll build this trade out really quick. So there. Okay, so 1, 2, 3, April 1st, 56.45. So I'm buying a call there, selling 2 calls at 56.50, and buying the skip strike at 65. So that's what it looks like. Okay, this is real price right here at 55.96. Okay, trade is in. Okay, let's go Dow. Dow, actually, I looked at a trade on the Dow last night. I'm going to see if I can price it out. So I wouldn't mind scooping up some shares of the Dow. I mean, I know that if we roll into like a nasty correction, the Dow could still be down. It's down from high to low just around 9.8%, which for the Dow is a little bit more than I thought. I mean, the S&P corrected like 10.7%. This is down 9.82. That's pretty volatile for the Dow. So anyway, I was looking at a 111 trade. I'm okay owning some shares. I would put in, that's a key level of support. If I was willing to take some shares, to be around 370. So I wanted to address that. Man, this is such an inefficient move on the Dow, though. That level right there, it's like I think we could bounce, but this market might kind of chew into that inefficiency if we end up having a correction. So anyway, let me look at it price wise. So 370. I'd only go out about 40 to 60 days on it. Let me see what the premium is. I think I had it priced in yesterday to be about $1 of income. 45 days out into May. And 370 is a pretty key level. Let me see what this looks like. So if I went 370, 65, and 60, you get 74 cents. Move these strikes there. 85 cents. Yeah, this is about what I priced in yesterday. So it's, I don't know. I got to be willing to own it. If I did take some shares at 370, I would own it around 364 or so. So I'd be assigned at 370. Right now, that probability is very low to get that assignment. I mean, I've got a 97% chance of profit on the trade. IV's pretty high, though. I wish I just got more premium for this one. Let me see. I mean, it's just not offering me much more credit to take on a bit more risk. So I don't mind that trade. Let me go out a little bit farther. So 45 days is okay. I'm going to go out a little bit further. Let me go out to June. Let's go to 90 days out. Similar setup, probably a bit more premium. So if I went 375 by 70 by 65, I like this a little bit better. So I go out further, 365. If I took on any shares, I'd own it at 360. That would be in line with a yearly moving average. That'd be previous resistance. That's way down here. Could I stomach the assignment? Yes, we'd have high to low 360. I mean, that'd be a 20% correction on the Dow. That'd be a nasty, nasty bear market if we get it. So I'm going to take this trade. Premium's good. 207 credit. It's a $200 trade through June. Little income. I'm going to pop this trade in. So this is DIA June 30th. And I'm doing a 1-1-1. So I'm buying a put, selling a put, selling a put. I would potentially take on assignment at 365. My ownership price would be around 358. Yeah, I like this trade. So that's a little bit more income. I like this kind of profit trap. All right, I'm doing it. Here we go. So 207 not filling, 205 hopefully gets filled. Hopefully over $2. Come on. I feel like I did this exact same trade last week and it didn't get filled and I didn't take the trade. All right, 203 just got filled. Good. 203 got filled. Next. 203 getting filled. Good. Okay, so that trade's in. I'll get that posted as well. Tracker. Okay, DIA. This is a June 30th expiration. Buy the 375 put. Sell the 370 put. Sell the 365 put. 203 credit. Willing to own if assigned. That'd be about 20% DIA correction. And that break even would be, I know, lots of snow last night. 365 minus 5 minus 2.03. So 357.97 is my break even if I'm assigned. All right, trade is in. Get that posted. This will be also an index trade. DIA. Okay, let me build that one out real quick. So this is a June 30th. And these are all puts. 1-1-1. So it's a buy one, sell one, sell one. 375. 370. And 365. There's the trade. So one standard deviation move gets me down to about here, around 390. Most of the time, about 70% of the trades will stay within that one standard deviation. So we'd have to have a pretty excessive move to the downside. I still have a profit trap. This is my 375 strike. This is my 370 strike. And then this is my 365. So my risk is I could still make money on this trade with a break even all the way down to like 357, right? So probability is here's my $2.03. That's filled. If price stays where it is, keep 203. Price goes up, keep 203. Price goes down, keep 203. Price goes down 1+ standard deviation. Well, I've got a profit trap. This will be closer to expiration, but watching. So we'll find out. So we get a screenshot of that one and get it posted. Okay. Trade is in. Russell. Actually saw some divergence on the old Russell daily chart. Again, could be a bear trap right around that 20% handle, maybe. So these trades, the only thing I have, these are close for profit. So the only exposure I have in the Russell right now is some own shares around 190 with covered calls that I'm rolling down. I've got like a 220 or 224 covered call, and I'll just keep kind of working this lower, collecting premium. It's usually like a 30 to 60 day covered call, but I'm just going to hang on to the shares for right now. If the IWM responds, with this being a chance for the market to rally, maybe. But if we don't get any clarity out of the S&P and the Qs, the small caps aren't going to do anything. So I don't believe that the small caps will be like this one glimmer of hope while the market is selling off. So point is, if we have a broader market like S&P's up, Qs are up, then yes, the Russell has a long ways to play catch up. But where's a more attractive level to play the Russell? In my opinion, it would be down here. If we come down to like 170, I'm setting up some premium trades. I'm playing the Russell for a range, a bigger range. But I did take some stabs. I had profits in March expiration, and even May. This trade worked out just fine. So it's obviously a support level. If it holds, great. If it doesn't, I'm not going to flirt with the floor there, but I'm going to trade it down here and see if I can just sell premium. Okay, let's go dollar index and VIX. VIX is up in the 20s. Let me look at term structure. I think we're still okay. So we have a little bit of backwardation through April, May, which it makes sense considering we've got tariffs and we have non-farm. So a little bit of uncertainty in the near term. Very flat and kind of persistent volatility for the next. I mean, this is going to change. Like if the market starts to rally, this will start to look upward sloping. So this will go back into contango, which looks like this, right? We'll start going that way, but we need to get through this first uncertainty period where there's more volatility and uncertainty in the near term than there is the longer term. But we are still quite elevated. If you're interested in selling premium, statistically, again, if we have another push higher in volatility, I think the crazy part is what we had happen in 2024, which was that August vol event over a weekend. That was our Fed day, I think the second or third largest single day move. This is one of the highest spikes on record of the VIX. So, I mean, I still like the idea of selling premium. Anything greater than 30, I'm typically looking at selling premium. This next go around, I may actually take on the shares of SVXY like I thought I would do this last week, or this last time we hit the March 13th low. I was tempted to buy some shares of SVXY. I was actually tempted to sell puts for about $500. But I didn't because it was I was going to sell like 3 or 4 puts, but it was going to cost me like 20 grand. So I was better off just like, hey, I'll just buy. If I just bought shares and get a $3 to $4 move, I'll just take the income that way. So that's probably what I'll look to do if volatility goes up. I'll see if the SVXY can come down, offer an attractive price, and then get long. So that'll be on the radar for something to watch. Dollar index. I still think the dollar index is going to be a big story for 2024 or 2025. If it is a pull back into here, watch this area. I wouldn't be shocked to see the dollar dropping. I think Trump and co want to see a weaker dollar. The complete opposite would be like dollar gets stronger, along with gold still doing well, or if the dollar gets stronger, gold finally starts to fall. Right now, though, I don't know why this would be a low in the dollar. Right, this is major support. If we just look at a simple trend line break in here, high, low, it can consolidate for whatever it needs to do. But as long as we don't do any technical pokes above like 106, I'd still be looking to short the dollar. So does this break and go lower? If so, coming back to this breakout point, does the dollar return to 101 or 100? That is why I'm long the euro, actually, because if the dollar does in fact slide lower, then my euro dollar position probably heads up to probably 112 or so, 111.50 to 112. Oil pushing up. I didn't love this. I still think this floor is going to be tested. I don't think this is done. Be careful on oil. There's just a big floor there. Plus, we have lower highs. So just be on the lookout. And I don't know when this is going to happen, but I will say that if oil, we can either reject off this 200 moving average, and that's a chance to sell it, or because let me go these highs. So resistance, 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 resistance. If oil were to come back into, let's say, $76 to $77, looking for opportunities to short oil there, might not be a bad play. I don't see oil going a big squeeze to the upside. I think it's pretty well contained. Threat to slow down. U.S. is wanting to produce a ton. So is Saudi Arabia. This floor has been tested many times. I don't believe this is a triple bottom. No such thing, right? This to me is a floor that's likely going to break. So I now I kind of have a trade that I like on oil, which would be if we return to some resistance areas, something like that. I'm looking for like $76 or $77 to give us a chance to short. So probably looking at some CL bear call spreads or some type of even bear put spread, but try to drive this price back down into the lows. Okay, USO, similar. Oil futures waiting, kind of the same structure here. Nat gas, UNG, I'm still long UNG. Gold, 31.28, new highs in the day. Indecision candle doesn't really mean anything. Gold could still be ripping to 32, 33. This momentum is as strong as I've seen, any market. Obviously, it's not just making insane percentages, but it is moving. Gold is up in that last little stretch since what? Since the end of March. The last couple weeks in March, we're still up another 4% in gold. So again, really overstretched on the distance away from the 200 moving average. Doesn't mean that's the top. It just means that I could see either this running hotter. I will say this though. I'll point a number out. Chart alarm 560 for XSP. Yeah, baby. There we go. Checking this really quickly. All right. Still sitting on some of these XSP trades. I want to see if we can stay above 560 by the end of the week. That would be kind of nice. Okay. So if gold runs really hot, I'll put a number out there. Based on this move from the current 200 moving average, we're stretched about 17%. Let me try to get that as exact as I can be. So here's the 200 moving average, right on it, about 17% higher. I would be shocked if we can get to a 20+% move above the 200 moving average. So I'm going to mark that and go from 20%. That puts us right around 32.17. So I'll say this, 32. I'll label this. Let's go 32.17. 32.17, 20% extended from 200 EMA. Okay. So, I mean, anytime we've seen like a decent, like 12% overextended, 15% overextended, we see some type of pause cycle. So look, it can certainly happen. We could go through this and we could blow through this. But if we move aggressively through that kind of 20% stretch zone, I'm going to start moving stop losses into my gold positions and start to protect the profits. Because at some point this will top out, and at some point that top's going to be at least a correction. And I think at some point we have this move that will be targeted. This will be a reversion trade at some point. I just don't know the catalyst on why gold would start to fall. Could be a dollar story. I don't know. It could be. I don't think it's going to be like more certainty in the global economy, because we certainly don't have that right now. Right. So anyway, I'll just kind of note that as like that 20% overextended move. All right, silver. I'd like to see if silver can climb to some new highs, and silver from all-time highs has, plenty more room to get to the 40s, which I'd love to see it. Bitcoin, we're trading at 84. Still a good gauge of risk on, risk off. I think this 75K, $70,000 area needs to hold. Like, it needs to hold. If it doesn't, there's a lot of potential damage to be done on Bitcoin. But strong support back here in 2023. Support again with our consolidation we had pre-election last year, and then another key area around that 70 to 74K mark. If we just, if you think about time alone, if we just get time to go sideways and it doesn't really do any major bearish moves, then I would say technically it's like this looks like we can round out some lows and start to see this thing revisit the highs. But we'd have to see something to the effect of a risk on rally. MicroStrategy at 294. Okay, Coinbase at 173. This 111 trade closed out for profit. This was closed for profit. This one I moved it lower, so I have one that's only out for another few days, another 16 days. This one's still running with a 155 on Coinbase. So Coinbase here. So if we stay above 155, this is only out 16 days. So right now I'm only up about 4% of my profit, but if we start to see it stabilize or even going higher, just time alone, 155, when we look at the strike prices. This is pre-earnings, and it's at the kind of expected move level, which is trading around a 20 delta. So I should be okay on that trade. There's about an 80% chance it stays out of the money, which is what I want. There's also that potential profit trap. So we'll see. Hopefully that's, that should be a decent income trade. If it's a winner, then that's 2, 4, 6, 8, about $1,000 on that trade. About $1,000 on that trade. But I have to see if Coinbase will stay above 155. Okay, and that chart alarm is set at 155. Ethereum, wouldn't touch this until we break that trend line. Copper pokes all-time highs, reverting. We're going to see if the copper bull market is intact, then this would be an aggressive buy. So look to see if this previous resistance maybe offers up some aggressive support. Again, this would be another indication, would the global economy go into recession? If copper is ripping higher, probably not. Probably not. So that's the other case against the the global economy, the U.S. alone. It's I don't know if the U.S. can afford to have a recession. So we talk about this Trump put, Fed put. I think that it's way lower. I think we could have a ton of volatility in those prices for the equities markets to go maybe 20, 25%, 30% lower from all-time highs. But I think there would be an aggressive V bottom. Again, there would be crazy amounts of some type of fiscal or monetary policy. But it's way lower than current price, that's for sure. All right. Anyway, Japanese yen. If we have another Japanese yen event like we did in 2024, I still like long 6J. I can only go out. Let me check this one here. I think contracts I can only go out to September or maybe a little bit further out to October now. I guess I can go to December. But I don't love the area. So, I was thinking, so I was long Japanese yen here, and that worked out pretty well. Um, I think it could go back up. I just don't want to take a position now. So I'll stay long FXY, which is like owning shares that would benefit from a stronger JPY. If futures comes back into a, let's say, a 50% zone, then I might look out for a swing trade into December. So this trade's closed for profit. I might look at a trade out to December and look at a swing opportunity with just an option trade. Okay, Nikkei. Nikkei is trading. Look, the Nikkei is trading a lot like the U.S. When the U.S. is down, Nikkei is down. When the U.S. is up, Nikkei is up. Maybe not today though. Nikkei is showing flat on the day. Well, no, I guess it is a little bit different. They're just trading a lot closer together than, I mean, you have a big separator between like Europe is doing well, China's doing well. That's about it. Like all of Europe is still hanging in there. But I think Europe's resiliency and continued growth is going to have to come with a stronger US market. I don't think the US can slip into a bear market without dragging things lower. So anyway, Nikkei, I still think this big range, this high, this low. If we end up at like settling back in here or coming back to retest the lows, is still a good buying opportunity, I think, in my opinion. DAX is hanging in there, but lots of dynamic support. Keep an eye on that. FTSE, same thing. Argentina, China, Brazil. Want to see if it gets above the 200 moving average. I'm repeating a lot of this stuff. Mags. This is a big thing for the markets for, I'd say, the short term. We've had a 24% correction, I believe, on Mags, which has been a major contributor to why the S&P and the Nasdaq has been down 24.5% from high to low. I don't know if this is able to do anything more than just fight back a little bit. I mean, if it's a bottoming pattern, then sure, Mags can come to the rescue again after that aggressive rotation. But now things are on sale, valuations are more realistic, and they are still like really good companies, right? But I think for the U.S. market, you don't want to see lower prices on Mags. They're still too big. They will drag the market lower. But I wonder if this like 24, 25% correction is enough to get this market to test the low, show some divergence. I think I looked at this on my other workspace here. Let's go Mags. Go to the weekly chart, not oversold. Go to the daily chart. I think we hit oversold. So you can see the change from price here. Low and low in price, disagreement. So some hidden bullish divergence. I think I could see that playing out. Esther, you talking about gold? Yeah. So I could see some bullish divergence here. If we're kind of lucky on Mags, then this kind of claws back into a, low, lower low. Does this turn into like a little little bottoming pattern? Perhaps, maybe. So if you want to cheer on the S&P, or you want to cheer on the Nasdaq to go higher, I think you want to cheer on the Mags. Because if this comes back and we have a fresh round of earnings and it shows that Mag 7 stocks are still doing well, still making cash, still beating earnings, that's probably enough to keep the markets pretty resilient with earnings expectations without having this really negative revision. Okay. All right. So keep an eye on Mags. Apple is green on the day. Amazon fighting back as well. Broadcom, probably my least favorite. It's not a Mag 7 technically, but it'd be like that top 8, top 10. Google fighting back a little bit as well. Got some dollar cost average levels in here. This one's still in for some profit. We stay above 150. Meta bouncing off that 200 moving average. Probably not a bad play in the near term. It would be defined risk. I don't want to take any assignment of Meta at $600. I don't want to own the stock like that. If it was lower, then yes, but maybe not a bad spot to nibble. A bite here that goes back up to these highs. I mean, that potentially is a $30 to $40 move if we have some direction. Microsoft also bouncing nicely off the lows. This one is out just a couple more weeks. We're trading at 380. I've got a put at 370. Microsoft is here. So just in profit, but 370. Let me check that by 16 days out. 370 right before earnings. Okay, so there's about a 70% chance that stays out of the money. It could be threatened, but I would be willing to take some assignment and repair that stock if needed if it's back below 370. I will set a chart alarm again at 370, and that is a 111. Okay, so if price returns there, then I might be taking the assignment, which is okay. Netflix, broken wing butterfly above the high is looking good for profit. That I think expires in the 17th. Right there. Yep, so about 16 days. I mean, just has more time needed, but likely going to be a full profit. NVIDIA 108, fighting back a little bit, not much. A lot of premium sold at the 75-70 zone for me. Still have a collar trade on the shares that I own. Break evens around like 110. So I'm just sitting on shares. If they get called away, it's around the 125, 130 level. If we get another dump lower, I've got a long put that will help me hopefully lower the cost. Tesla trading at 272. I'll come back on Tesla. We came back and sniffed my covered call around 247.50. Probably not the time to get greedy, in all honesty. So the trade that I put in, got the assignment, worked my cost basis down to the 220s. If it gets called away this Friday, then Tesla should be good for a nice little income trade. Here is the position. You go to this account, for example. So covered call is positive. I collected another $40 on the covered call for literally a week. I did a roll from the 247.50 from last week to the 247.50 this week, and I collected another, chunk of income. It was like a $2.50 additional roll. I think I just am okay getting it called away. If it gets called away, I'll make like $6,000 on Tesla. It's been 2 weeks of trading. I'm okay with that. I still have income trades here. For 16 days out, if we stay above 255, right now it's showing that I'm upside down. So that's another reason I'd like to get rid of this stock for repair. If I repair this one for about $2,000 in profit, so this would be about 2K in profit here. So I'll take that. And then if I'm going to be assigned again, it's going to have to be below 255. Here's one below 195. Here's one at 245. So I mean, I'm just going to line up some income trades, if that's what I have to do. So I'm just going to take the repair, take the profit, move on. We'll see how it settles, but I don't want to get super greedy. And I mean, I guess unless the reaction is like the market just starts to rip Wednesday and goes hot, like let's say that this Trump stuff is buy the rumor, sell the news, and the market starts to rip, then sure, maybe I roll it for one more week. These income trades all look a lot better. 1 week at a time. If we go back up to like 280, 290, I know it's a volatile stock, but going a week out and being $30, $40 lower, I can just check the levels. I take that back. I wouldn't want to roll this any further than the 17th because I don't want to necessarily get in the way of earnings. In case there's a negative earnings on Tesla, that thing could drop another chunk to the downside. Could, maybe not. But yeah, if I was going to roll it, I would keep it within like the 11th or the 17th to collect the income and then not be stuck in the stock before we have earnings or during earnings rather. Okay. All right. Berkshire pushing those all-time highs again. Good for old Berkshire. I still think it's a short. I think this is another one that the shoe's got to drop at some point. We have a reasonable bar count. Last time we had a 350 bar count. I mean, that was the S&P this year. That was the Nasdaq this year. That was Meta. That was Netflix. That was Costco. That was Walmart. That was a lot of stocks that I shorted this year for profit. Berkshire Hathaway is one of those as well. I'm curious, like, what would be this? Number one, like, why is Berkshire higher? Probably because they're sitting on 20% of their assets in cash. So the market kind of knows, like, oh, they're well positioned. But anyway, It's crazy how it doesn't look anything like the S&P. Bonds. Nice little rip on bonds. Okay. Got my TLT out to April 30th. $92 is my sell strike. It may get called away. It's up $1,600. I've got this on every account. So it's 1,600 times. So I'm up about 21 grand on TLT. I'd like to kind of play the income side of this. I could see TLT able to go higher. This high is 93. I don't want to get too fancy or too cute with it, but I would say if we have a play to symmetry, I mean, even if I get this thing where I try to stay with TLT until we get to 100, like I could see us coming back to these highs again. 100 would be like a nice destination to be long. Also, this eliminates some of the volatility out of our portfolio by having the what should be like a safety level. If equities are down, bonds should be performing well. So, I mean, if I was looking to stay long TLT, I would be staying long. I think $100 is a good target. So, not bad. All right, let's get some other stuff here. 10 and 2 year futures. Anything on? I mean, we did have a little scare through the last couple of weeks. I mean, J&K is your high yield bonds. This is kind of your credit spread look. So far, so good, but keeping a close eye on this one. If it ends up dropping lower, then we're going to see some less liquidity, probably some more exits, probably some more fleeing to the downside. Initial jobless claims. We talked about this one yesterday. Watching that, kind of see if there's any major upticks. This is your unemployment rate. We're at 4.1 for the estimated non-farm on Friday for unemployment. Core PCE is at 2.8. China probably just still hanging in there. Baba's fine. Baidu at 92. I think I still have a collar on Baidu. Baidu there. This is my collar trade, I believe. Yep. So this is a collar trade. So I have the shares. There's my collar trade. Only 16 days out. I'll probably just put another collar on it. I don't mind it getting called away at 100 or higher. Just depends. But I want to have a protective put on it as well. FXI, KWeb, JD's the other one. This one, I don't remember where I rolled this one out to. Maybe April, maybe May. Yep, out to May. So if it stays above $40, I get this one called away for some profit. This could end up being a nice little winner. This should be maybe $4,000 or $5,000 on JD. Just has to stay above 40. I'll keep an eye on that one. Okay, Schwab dividend. Hanging in there with a pretty good resiliency. Looks a little bit even better than the Dow. Schwab growth, garbage, but we could put in a low. I mean, look, this bull market scenario, just gonna make a little case for it. Let's say that the market goes this flush, this pullback, this bear trap, this move back up, settles back in, and then eureka, we're back up to highs. I don't know if that's the case, but I mean, that would be a bottom. If we're going to bottom out around that 200 moving average, that's what it's going to look like. Some type of bull pattern off these lows, some type of bear trap. My concern would be that we rally up here and it's just a bear flag and the market's like, yeah, we're not done yet. And then there's more. So it is very much a 50-50 outlook in my opinion. Advanced decline, how many stocks above, as far as like broader market timing, until this is dumped back down here to like 12%, where this is dumped back down to like 10 or 11%. I still don't think it's a full, full green light to just buy everything. Some other stocks here, fine. AXP staying above this one. Did I close the April one? I think I did. Yep. So I just have this ratio spread out to May. Need to stay above 260. Johnson & Johnson pulling back. Oh, baby, what's going on here? Earnings is mid-April. News. Judge rejected a $10 billion settlement proposal, marking its third failed attempt. Okay, well, I've got puts at 135, so I'm not that worried about it, but this has been a pretty good performer in the healthcare space for me. Progressive Insurance off near highs. Chubb near highs. That's good income. Palantir, ratio spreads. Let those go to full expiration. Carvana, nothing. Maybe an opportunity down here on Salesforce, maybe. O'Reilly, I did a hypothetical one. I talked about this last week. This was a 417. I didn't take this trade, but I'm watching this one closely. This would be a threat around 1460. We're not that far away. I mean, that high was 1450. So this this is one of the top 50 performers in the U.S. right now. All right, some other stocks is lifted in their sectors. Let's go currencies, and I'll let you go for today. Aussie CAD, still like long, still like leveling in. Aussie Swiss, same thing, still like long, still like leveling in. Watching that flash crash low from August 2024. Aussie Yen, watch the flash crash low if we're going to build support. That's a pretty good way to do it. Aussie New Zealand, I'm still long in this trade. I don't know if this is, I mean, this is my target. I'm long with a channel here, right? So long with the channel here and looking to see if we just go back up towards, 1390. Realistically, I might just take this trade off. If we come back up to these highs, I might just dump the trade or at the very least move a stop loss. But I'm looking to see if this channel will still hold and we get to higher highs. So that's why I'm holding long. Otherwise, it's just a big range trade. Aussie CAD, New Zealand CAD, Aussie, New Zealand. I could range trade those things forever and never really worry about direction. Just trade the inefficiencies, trade the pivots, trade ranges, and they usually are pretty responsible. Aussie dollar, nothing on this yet, but I would look at a pending buy again if it was offered up around like these lows. I'd look at an Aussie dollar buy trade again, or I've got this buy limit down here at 6,000. CAD Swiss, I'm still holding long. Looking to see if we can stack these babies up all the way to about 64.90. CAD Yen, right off the equal lows from August. Swiss Yen, no trade. Euro Aussie, be careful on the Euro Aussie, Euro CAD, Euro New Zealand. There's just a lot of aggressive movement. You've got to get your higher time frame structure with your lower time frame precision. You've got a sharp turn on the day. It's just hard to trade like a straight up candle followed by a straight down candle. It's very hard to trade that unless you know where this high is at, and it still didn't test it, right? It didn't test the highs. So anyway, somebody's asking why is Bitcoin jumping? I don't know. I mean, the markets are up. So we've got 55, 58 in the S&P. I mean, the S&P's up 70 points from the lows today. There could be just some flows. I'll go back to Euro Aussie in a second. I mean, I wouldn't say this is jumping. I'm just saying like it's green. But Bitcoin doesn't look exciting to me until we're above these highs or we're coiling into a better price. So, I mean, I wouldn't get overly excited unless we're on the right-hand side of this trend line to say that the bulls can clearly see there's permission to then go up. Why is the market up today? Like I said, I mean, this could be the bear trap scenario. I mean, look, this whole idea of global recession is, I think, a little overblown, right? I mean, prices can lead there. Like I get it that it's all connected. So I mean, if the S&P rolls over and we start cracking these 5,500 lows and we start getting down to this terrible bearish territory, then Wall Street could feel it first. Price action feels it first, and then all of a sudden it's like, I mean, there's momentum both ways, right? A job gained could be followed by another job gain, job gain, and that sentiment and that trend continues. But job loss follows another job loss, follows another job loss, and all of a sudden that it's a perpetual cycle. So markets up today. I mean, I think it just shows like the levels were defended yesterday. There's maybe some drift and recovery, and this could be another opportunity to kind of de-risk just a little bit. But I mean, I'm not a perma anything. I'm not perma bull. I'm not perma bear. I think this is a spot to be just not doing anything brave or stupid. Just trade small, take good trades, define risk, and be patient. I mean, if I'm going to get way more bullish, it's going to be way the heck down here. I'm not way bullish now. I think taking some bites here is understandable, but that's about it. There's too much noise around this 200 moving average for this market to be indecisive. And it's like the bears can take control, the bulls can take control. I don't know which one's going to do it. Okay. All right. Let me go back to currencies. Euro Aussie, Euro CAD. So, I mean, it looks like we're getting a decent commodity move, meaning like I could see this heading back down into some type of corrective level. So, maybe getting a little nod from Aussie, CAD, New Zealand getting a little bit stronger here. Euro CAD, same thing. Euro Swiss, fine. Euro Pound, no trade. Euro Yen, Euro New Zealand. Yeah, I mean, if it holds this level, I mean, Euro New Zealand getting back to lows or just a pullback zone. There's previous resistance here. Could be a little, again, if you're following on a smaller time frame, could be a little 1-to-1 or slightly greater. Just got to be in those smaller time frames for some precision. Still leveling into euro dollar. Let's see what happens there. Pound Aussie. This could be a pretty good fade. I like this one potentially as I want to see this channel break though. Like this isn't perfect, but if we break the channel, returning into like previous highs or some type of pullback zone. Pound CAD. Just some type of balance, right? Here's your low, here's your high. If the market heads down, we're just finding some equilibrium somewhere here on the pound CAD. Pound Swiss, nothing. Pound Yen, nothing. Pound New Zealand. I don't like it as much as Pound Aussie, Pound CAD look a little bit cleaner. Pound Dollar, no trade. New Zealand CAD is still like leveling in on my big lows. Buying lows, buying lows, buying lows. Stay in the range. Big range from 76 to 88. That's a 1,200 pip range. I would trade that all day. New Zealand Swiss, leveling in. New Zealand Yen, off the lows. Be careful on that one, as of course, stop area below these lows. New Zealand dollar. Watching closely. I mean, maybe a revisit of these lows. 5,600 down to 5,500, maybe not a bad spot. I'm going to delete these levels since I closed out those trades. So, yeah, if we get to 56 or 55, I'll probably take some bites again. Maybe looking to go long New Zealand dollar. Dollar CAD, no thank you. I don't know what this thing wants to do. This whole idea of like U.S. and Canada becoming more like adversarial instead of friendly neighbors could make for an interesting dollar CAD position later this year. I just don't know where we're going to go. Yeah, I mean, I see this as resistance. This little shenanigans that the market played with that big gap over the weekend. That could be a topping pattern where if oil rallies, then sure, the CAD gets the upper hand for right now. I just wouldn't be super like I wouldn't be long-term bearish on this. I could see us going back to like 3,900, 3,800, but that's a halfway point, right? So could we go further and go all the way back down to 32? Maybe, but I would say if you're lucky right now, the swing is this type of swing, playing it down to like 4,000, 3,900, getting out, taking your profit, and then see what's next. Because if this level bounces, resistance becomes support, you can take this right back up to the highs. But I'm sure there's a lot of traders that are positioned for this right now, but short dollar CAD, stop loss above the swing high, and hoping there's some follow through, right? Dollar Swiss, I wouldn't mind it hitting 92.50 or 92.05 again or 9200 again. If it pulls back, that's fine. I'm just going to hang in there. Dollar Yen, no trade yet. And that's kind of it. So, all right, covered a lot. Gold, silver, dollar, all the currency pairs, stocks, where are we at for the indexes, watching things. Trump tariff talk tomorrow. We're actually green on the day, so SPX up 0.44. Q's, NASDAQ up about 0.7. Dow's up 0.2, Russell's up 0.5. NASDAQ leading the way. I think MAGS is probably the big reason why. MAG's up 1.87%. And helping the markets get a little lift. MAG's up almost 2%, and the Nasdaq up 0.75%, 1%, S&P up about 0.4. If the MAGS fights back, I think that helps the market get a lift off. Fibonacci. I mean, it's not an algo. It's just an auto. It's an auto indicator. It's not an algo. So, I mean, it'll plot for you. You can go to your charts and just plot it. So it'll auto plot your fibs, which is kind of helpful. That was something proprietary to Smart Trader, yeah, from what I know. So, all right, I'll let you go for today. Let's see what happens tomorrow. Today's April Fool's. So let's see what tomorrow's real news from Trump brings. I don't know what time he's talking tomorrow. So it looks like sometime between, 10:30 and it's got 4. Okay, so 4 o'clock. It was tentative. Now it's 4 p.m. So I think that's probably a good thing because that means it's after market. So I wonder if all day tomorrow this will be good for kind of selling some premium. Hopefully, if the market is like calm and doesn't really know what to do, that would be great. I can sell some premium on SPX tomorrow, grab a few bucks, and then we can see what aftermarket hours looks like and what Thursday's potential gap looks like, one way or another. We're going to deal with it. All right. See you tomorrow, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.